Hey, welcome to our weekly Redfin Live housing update. Thanks for joining me this evening. Usually I do this during the day on a Thursday after Redfin publishes their update, but had some appointments today, so couldn't do it like I normally do during the day, so thought I'd do it this evening. And definitely didn't want to miss this week's update. So like most other weeks, a lot of changes happening in the housing market. There's no doubt about it. And you definitely don't want to miss this update because I'm going to show you some hidden Redfin data that I've pulled together in a chart. It's kind of some back behind the scenes information that Redfin has that they usually don't publish. And it can give us an idea of what's happening in the housing market. And really that's what this update is about. And it's for people that are curious of what's happening nationally and in many metros across the United States with housing and prices and inventory. And, is it a good time to buy or is it a good time to sell? All those things, right? So that's who the update's for. And again, thank you for joining me today. So the way this works is I'll review the national numbers first, and then I'm going to go into the metro numbers. So we're going to look at first at Columbus, Ohio, because I'm a real estate agent and an investor just outside of Columbus. So we're going to talk about Central Ohio for a second, and then we're going to go into some other metros. So today on the docket, I've got Indianapolis. I had a viewer ask for me to review Indianapolis. So by the way, if you have a metro that you want me to review on the update, just comment. And I'm happy to do it. If I miss it this time, I will do it next week on the next update. So please comment below if you have a metro you want me to analyze. But today we're going to do Indianapolis. We're going to do Houston. I've got somebody asked about Boise, Miami, Las Vegas, San Jose, Atlanta, and Minneapolis. So there's a lot of metros today to talk about. But I like to go around and hit different parts of the country and find out what's going on. So that's what it's about. Let's get started. All right. So last week, Redfin did not put an article out. They actually just put data out. But this week, they come back with the article. Now, I'm not going to read the whole article. I just have a few highlights having to do with their commentary. And one thing that stands out to me is that, or the few things stand out. Number one, we've had 9 straight weeks of median sale price increases and 9 straight weeks where we've hit a record high nationally. Remember, this is all national at first. So, and by the way, real estate, obviously hyper local. It's going to be down to your neighborhood, your subdivision, maybe even your street level. Sometimes county, if you're like, in Ohio, where I am, and it's kind of rural. Sometimes it's a county level. But in any case, this is national. But national median sale price is now $397,000. And that's the 9th straight week that we've seen an increase and a record high. So that stood out to me. The other thing that stood out to me is that just 32% of homes are selling above asking price. That's down from 36% a year ago, and the lowest share at this time of the year since 2020. So homes are not selling above asking price as much as they were in 2020, and that's probably a good thing, right? Homes are, probably unhealthy for the market overall if homes are going to continue to sell well over asking. So that's down 4% year over year. New listings, I thought this was interesting too. New listings are up 7.3%. So we've got new listings up, which is no surprise. We've seen that over the past few months, but the increase in new listings is not substantial like it was a few weeks ago. It's starting to die off a little bit. You'll see that in a second. And because of that, we actually are only up 18.3% year over year in active listings. So while we do have more active listings nationally, it's not an explosion of inventory. And you've got to remember that all of this, the new listings, the active listings, that all came from historically low levels of inventory. So we've started, we're comparing year over year numbers, but we're comparing basement numbers. So an increase of, 7% for new listings, 18% for active listings. It's good, but it's not fantastic if you want a lot of inventory and prices to start to moderate or soften or come down, because generally speaking, you need a lot more inventory than that. So it's, they're up, inventory's up, but not like we need. And then this comment at the end of the Redfin article I thought was interesting, and I agree with this 100%. They always put a Redfin agent at the end of the articles of their weekly updates to kind of tell a tale of what's happening in their local market. So this Redfin agent, Julie, in the Bay Area says, the longer rates stay high, the pickier buyers are getting. Buyers will jump ship or try to negotiate the price down with any sort of tiny problem. Sellers should take the time to prep, price, and promote their homes correctly to find the right buyer. That being said, there is one segment of the market that is still moving fast, with homes going over asking price with multiple offers, move-in ready homes with big backyards located in desirable school districts. And, that's probably getting back to what we saw, several years ago before everything went haywire is, hey, if your home is priced right, if it's marketed correctly, and if it's dialed in, if it's move-in ready, has a nice yard and in a good school system, going to move quickly, maybe or usually with multiple offers, a lot of times over asking. But if the property is, not move-in ready, has a lot of problems, maybe the backyard, there is no yard, maybe it's in a bad school system, I guess, or it's completely priced wrong, then the property's going to sit. And that's definitely a shift compared to what we've seen in the last few years. You could almost like list a house, you would list it at a price that you thought, well, that's too high, and it would go way over that. And you're like, wow, okay, I guess it wasn't too high. So anyway, it seems like it's getting back to normal as buyers are getting more stingy, because rates are higher, right? Although, and we're going to talk about that next, we're going to go into leading indicators. So next, let's look at these leading indicators of home buying activity. And, and mortgage rates. So 30-year fixed mortgage rate, the daily average 6.99 as of July 10th. That's down from 7.14 a week earlier. The first time in about a month it's dropped below 7%. I just checked it right before we jumped on here. On Mortgage News Daily, it was 6.85. So that's a big drop. And I think yesterday it was right over 7, but now it's 6.85. And I think rates matter. So comment below. You tell me if you agree. Do rates matter or not? But I think they do. I mean, there's a psychological hang up, I think, at 7%. Like a lot of buyers are like, well, I don't pay 7%, but I'll pay 6.85. So is it a difference in payment? A little bit, but usually, right? Not a ton. But psychologically, I think that 7% mark is important. Probably the 6.5% mark is important too. If we drop below 6.5%, it's probably not going to be great for the market. I mean, we're probably going to have, more demand come back. We don't have a ton of inventory still, especially affordable inventory. And so I'm going to assume that lower rates would not be good for us in affordability right now. So the mortgage purchase applications, let's talk about that next. That increased 1% from a week earlier. I haven't seen an increase in a while on mortgage purchase applications. So that's probably good if you're in the mortgage business. It's down 13% year over year. So still down compared to last year, but up 1% from a week earlier. And when you look at the rate, right, the first time in about a month, the rates dropped below 7%. And now you see mortgage purchase applications increase 1%. I think there's a correlation there, right? Rates matter. They just do. Redfin Home Buyer Demand Index. I haven't seen this up in a while either, but they're saying the index is up 2% from a month earlier, down 16% year over year. So the Redfin Home Buyer Demand Index is essentially like, they're saying it's a measure of requests for tours and other home buying services from Redfin agents. So they're kind of specialized, or proprietary formula of demand in the marketplace. And that's up 2% from a month earlier. Touring activity, flat from the start of the year. At this time last year, it was up 1% from the start of the year. So it's flat, meaning how many people were touring homes? The same amount as they were January 1st. And it's, July. So that's strange, right? Obviously, demand is not like it was a couple years ago. Google searches for homes. This is up too, up 17% from a month earlier, but down 14% from last year. Now, I don't know if you know this or not, but you can actually click this Google trend here, and you can go to this update anytime you want on Redfin. You can click this Google trend, this hyperlink, and it'll take you to the Google trend page where you can type in like different search terms, to find out who's searching for what on Google or how many people are. And so that's how they get this. It's kind of interesting if you look at it, take the time to dive in there. All right, so these are the US highlights for the top 400 metros. Now, these are the leading indicators for, price, inventory, demand, that type of stuff. So median sale price, already mentioned that before, $397,000. It'll be interesting when this actually starts to drop. Do you think it will? Comment below. Tell me, do you think median sale price will actually start to drop soon, like this summer? There's a lot of people. I just heard somebody, you have to check this person out if you haven't already. Her name is Melody Wright, and she came from the mortgage business. She's on YouTube, has a YouTube channel, and has awesome analysis on the mortgage business. But I heard her today say that she thought home values were going to be down, I think she said 12% this year over year, by the end of the year. I've heard others say 5-6% down. They predict down by the end of the year, but right now it's up 4.7%. It's an all-time high, biggest increase in 4 months. So right now, the median sale price, which is the median price, the middle price of all homes sold. So if you have 100 homes, it's the home in the middle, number 50. That home, what that home sells for is what the median price is. It's not average, different. Median asking price, $406,000. That's the lowest level in 3 months. You're going to see that in a second. Asking price, all of a sudden, it seems like in the last 4 weeks, has started to go down, not up. It was going straight up. So now that's going down, does that mean eventually median sale price will go down? There's a spread there, right? $406,000 compared to the median sale price, $397,000. Think about that spread of roughly $9,000. So, as that median asking price moves down or up, does that drag the median sale price with it? It probably does somewhat, right? But it'll be interesting to see where the sale price goes now that the asking price is dropping. Median monthly mortgage payment, $2,742. That is at a 6.95% rate. That's up 5.3% year over year. But it's starting to moderate, meaning, a few months ago, it was 11% over last year's median monthly mortgage payment. Now it's only 5.3. Point is, eventually unless prices and rates drop substantially, that thing is just going to start, it's going to probably level off, and people, it could be the new normal. These house payments, unfortunately, could be the new normal. Pending sales, 83,000 units, down 3.5%. Last week, it was down like 4.9%. So pending sales are still low compared to last year, and there's by no means pending sales are increasing substantially, but the loss year over year isn't as great as it was last week. New listings only up 7.3%. Got to do better than that, folks, if you want substantial price declines. Active listings, 970,000 units, up 18%, smallest increase in over 2 months. So that is telling to me, right? It's, there are more people listing their home for sale, but it's not like a flood of inventory, obviously. Months of supply, 3.6. Months of supply is simply the available properties to purchase divided by the volume of sales of those types of properties. So, or in that metro. So if you've got, let's say 100 homes on the market for sale and you sell 50 in a month on average over the last 12 months, monthly you're selling on average 50 homes. That's a 2 months of supply. If you only sold 25, it'd be 100 divided by 25. So it's 4 months of supply. So they say 4 to 5 months of supply is considered balanced, with a lower number indicating a seller's market. So technically we're still in a seller's market nationally, but I'll ask you, if we hit 4 months of supply, which is right around the corner, do you consider it balanced? Like if you go into your market right now, if you're looking to buy a home or you're just paying attention to the market where you live, do you think it's balanced? Tell me in the comments. Do you think it's balanced? I don't know. I don't feel it doesn't seem balanced to me, but I guess we're close to a balanced market. Share of homes off the market in 2 weeks or less. Off the market doesn't mean delisted or canceled or expired. Off the market means in contract. So 41.1%, that's down from 45%. So just like the percentage of people paying over list price for the home, that's starting to moderate as well. The share of homes off the market in 2 weeks or less. So obviously homes are sitting longer. Median days on market, that tells the story too. 32 days, that's up 4 days year over year. So more homes are sitting on the market longer. Share of homes sold above list price, 31.9, down from 36. Less people paying over list price. That's probably a good thing. Share of homes with a price drop, 6.5%, up 1.8 points. So people are still cutting their prices, their asking prices. An average sale to list price ratio, 99.6. Sellers are getting about a 0.4% discount on homes overall. When you look at how much they are listed for versus what they sell for. Now, remember, or important to know here, sale to list price ratio doesn't mean that's the original list price. This is just the current list price. So if you listed a home at 100 grand, and then you drop the price to $95,000, well, if it sells for $95,000, that's 100% of the list price, but it's 95% of the original list price. So if somebody already dropped their price, this is a little misleading. But it's not like buyers are going in and saying, hey, I'll give you a lot less for this home. And sellers are like, well, I'm desperate, I'll just take it. That's not happening yet. Some markets it probably is, but in general, across the country, it's not. This is all national stuff. All right, metro level highlights. So this is where they talk about the leading metros in different categories. So kind of the best and the worst, depending on how you're looking at it and what your goals are. So median sale price, where they've increased the most, and this is the top 50 most populous U.S. metros. You've got West Palm Beach, Fort Lauderdale, Detroit, New Brunswick, New Jersey, and Anaheim, California. Every week, these same metros make the list, basically. There's a little change, right? Like Detroit's popped up over the last few weeks, but Fort Lauderdale, West Palm Beach, New Brunswick, and Anaheim seem like they're on there almost every week. I'd love somebody to tell me on the live or after in the comments, whatever, what's if you live in one of these markets, what's going on, because they're always on the top list of price increases. All right, metros with the biggest year-over-year decreases: Austin, Dallas. Look at that, declined in just 2 metros. Just 2 metros for the median sale price of the top 50. So 48 metros increased. Man, at some point you think that has to change, right? Pending sales. So a sale goes, or a house goes into contract, it's considered pending. A pending sale, that term changes by market. Some markets consider pending, when the property goes into contract. Some, like here where I am in Columbus, that's usually a cash offer or a cash deal with no contingencies. But in any case, when it goes into contract, that's where they're classifying pending sales. San Jose, 18.8% increase in pending sales. San Francisco, Boston, Montgomery County, PA, and Cbus, Ohio, all led the nation or the top 50 most populous metros with pending sales as far as year-over-year increases. Where they drop the most: West Palm Beach, Houston, Miami, Minneapolis, Atlanta. We're going to get to some of those metros on a more detailed basis here in a few minutes. All right, new listings, which is a house that just hits the market, where those increase the most. You've got San Jose, Jacksonville, Las Vegas, Miami, and Phoenix. Look at San Jose, 29% increase in new listings. Wow, a lot of new listings. And look at pending sales in San Jose, 18.8. So a lot of new listings hitting the market, and looks like they're moving a lot of houses too. Where they drop the most. So new listings drop the most in year over year in Atlanta, Minneapolis, Chicago, San Francisco, and Portland, Oregon. All right, now we'll do some of the charts that Redfin puts out. I'm going to show you in a second where you can look at this information anytime you want in real time, but these charts are static just for their update, which is fine. Median sale price up 4.7% year over year. We already talked about that. You see the chart just going up, up, up. So for this to drop, and I mean, to drop to 12% loss, like down 12% year over year, that's going to take a substantial decline. And there's a lot of people that are still predicting. I mean, like even Zillow, I think, said home prices, their last update said that home prices would end up like 1% down year over year. So that means they would say, hey, this line, this blue line, is going to end up down here underneath 2023 by the end of the year. So comment below, do you think that's going to happen? That's going to take a substantial decrease. I mean, to move 12% down or even 1% down, that's a 5% swing compared to where we are right now, because we're up 4.7% now, right? So I guess 5.7% swing. All right, enough of the selling price. Median asking price, 5.4% year over year, up. But look at the trajectory; it's down. It's starting to, it went kind of reached its crescendo, and now it's starting to fall a little bit. Wonder, hey, will this start to drag that median sale price down? Home buyer housing payments. We know about that. That's up. That stinks. Nobody likes that. Pending sales down 3% year over year. Look how it just mirrors 2023. Right? So again, not a huge gap like it's been year over year in pending sales, but it's definitely lower than last year. No doubt. New listings of homes up 7% year over year. And that's this blue line here. So it's up compared to 2023, but definitely down compared to 21 and 2022. Active listings. That's up, but again, it's not like it's skyrocketing up now. Now it's starting to level off a little bit. And you're kind of going into the, late summer and fall, where generally speaking, you don't see as much inventory, generally speaking. But it's, if you're waiting for like a massive housing crash wherever you live, and you have to look at it locally, but nationally, there's just not enough inventory to do that. There's just not, right? Because remember, we came from the basement in active listings, historically low levels. So 18% on a really bad number isn't necessarily that great. 3.6 months of supply. This has gone up. Now, one of the reasons why this has kind of gone straight up recently, and it's certainly higher than the last few years, you can see this in the Columbus market. It's like, and the local board of realtors will never talk about this for some reason. I don't understand why, but you really have to like peel back the layers to find this data. But new listings of homes for sale under the median sale price here in the Central Ohio market is only up like 3%. It's only up 3% year to date. When you think about homes priced under the median sale price. Over the median sale price, we're up like 22%. So expensive homes are dominating the listings. And a lot of those have price cuts, and a lot of those people can't afford. So they're, if you're way over the median, again, if your median, like in Columbus, is like 350, now it's 354 according to Redfin as of this week. So if it's 354 grand and you've got a home priced, $800,000, $900,000, $2 million, there aren't a lot of people in the market that are going to be able to afford that. So it's obviously going to sit longer. So it's just a conversation as an agent you have to have with your seller that, hey, you have an expensive home. It may not sell as fast as, or probably won't sell as fast as the $250,000 house down the street. So that's driving months of supply, because a lot of the inventory hitting the market is expensive, or if it's priced wrong, it's going to sit and drive that months of supply up because people aren't grabbing those houses. A lot of the reason is because the move-up buyer, the person who owns the $300,000 house, doesn't want to give up their 3% rate or their $300,000 house. So they're like, I'm not going to move and buy a $800,000 house now. I'd consider it when rates were, 3%, but now that they're 7 or 6.5 or 6.85, whatever, maybe I don't think I will. It'll be interesting if rates drop below 6.5, if those move-up buyers start to come back. That's part of that golden handcuff effect that people talk about, where they're locked into their low mortgage rate and low price. Anyway, that's months of supply. 41% of pending sales under contract within 2 weeks, way down compared to last year, or significantly down. So homes are sitting longer. We just talked about that. Homes sold in a median of 32 days, up from last year. We know that. 32% of homes sold above final list price. It's good to see people not paying over list price. 6.5% of listings had price drops. And, maybe the other thing about price drops is that people were just like pricing them foolishly, because they're used to seeing and on Facebook or whatever and hearing about their friends selling houses at whatever price they could, or whatever, whatever they commit, they price the house for, they get, So maybe that's, kind of a social effect, I guess. Could be. Average homes sold for 99.6% of final list price. Definitely less than the last few years, but that's not abnormal to see. I mean, historically, I want to say in Columbus, it's like 98%. If you look back the last like 15, 20 years. So like 98% of the time, houses are selling for 98% of the final list price. So 99.6, not surprising it's dropping below 100. But I'll tell you, in Columbus, we'll see that in a second, it's probably over 100% here in Columbus, unfortunately. Historically, it's been under that, but lately it hasn't at all. Redfin Homebuyer Demand Index down compared to the other years. People just, a lot of them don't want to make the payments that the high rates and high prices are causing now. And, it's expected the demand's going to be less. There's no doubt. But if mortgage rates drop, that could change this big time, which we don't want if we're trying to, have affordable housing, obviously. All right, let's go to metro level highlights now, more specifically. All right, so this is the Redfin data center. You can go here anytime you want. This will give us metro level data for like the top 400 metros in the United States. And you can look at metro, or you can even look at county level, which is pretty cool if you want to look at a county level. So I have Columbus already up, and I started with the median sale price. Like I said, $354,000 median sale price, up 4% year over year. It dropped last week to 352 from the previous week at 354. Now it's back at 354. It's ridiculous. It's high. This is more expensive now than Houston, Texas. Where the median sale price has, how it's grown, and the trajectory here in Central Ohio is ridiculous. I know it's like that in a lot of other metros too. I'm not saying it's not, but being close to it here in Columbus, knowing where houses used to be priced, it's nuts. Nuts, nuts, nuts. All right. So that's median sale price. Now let's do new listings. It's probably going to reset for me. It did. All right, so Let's do new listings. New listings for Columbus. Yeah, no surprise here. We're up 3.5% year over year overall. And remember, that growth is primarily from more expensive homes, not affordable homes by any means. And by the way, do you see affordable homes in your market sitting? Move-in ready, affordable homes in good areas, sitting with nobody buying them. I want to know. I haven't had anybody tell me that yet, that they're seeing that. If you start seeing that, like affordable homes in your market, like priced right under the median, sitting, and they're homes that you can move into and not have to, like, you know, fix a basement wall or put a new roof on or, you know, redo a kitchen or something like that, and they're priced correctly, I'm not seeing those sit on the market. I just don't see that. So those are going quick. New listings, nevertheless, up 3.5%, but it's not very impressive growth. Active listings in Columbus, let's look at that. Up 14.57% year over year, active listings. I mean, it's great and everything, but not near enough, and now it's starting to level off. Let's look at median days on market. Median days on market, 35.7. That's an increase of 1.5 days year over year. So just like the other years, basically, right? I mean, there was not that much difference. We're at 35 days, 34 days. I mean, heck, look even back. This is nuts. I guess I haven't really examined this before, but like in 2021, when things were crazy, median days was still 35. So it wasn't like homes were selling in like 10 days. There's some areas of the country, I'm trying to remember what it was. Was it Boston I looked at last week? Median days was like 9. So there are areas where homes move a lot faster than normal. Okay, let's look at price drops. So price drops, 6.2% of active listings had price drops. That's definitely an increase from last year, but again, those are probably houses overpriced or really expensive for the area. Let's look at pending sales. Pending sales, up 2.8%. We're one of the top metros. Columbus is in the top 50 according to Redfin this week for pending sales at 2.8. So it's up a little, but not a ton. And rightly so, there's just not enough houses to buy that are worthwhile, right? That's one of the issues. Let's look at homes sold. These are closes. Down 1.9%. So we're selling less homes than we did last year. No surprise. Let's look at one more thing. Months of supply. All right. Months of supply is now 10.7 weeks, which, what's that? A little over 2 months of supply. So it's still a seller's market here in Columbus. Still a seller's market. All right. So things are obviously gridlocked in Columbus, unhealthy, and getting worse. Prices are high. Inventory is not amazing. And we're headed into, the fall and winter time already. Year's moving quick. All right, let's do the next metro. That's Indianapolis. Now, the viewer who asked me to review Indianapolis wanted me to review like inside the outer belt. That's what they had asked, but I don't have that level of detail in Redfin. I may have it in Realtor.com data, which I'm going to do a live up for Realtor.com data probably early next week. And that level of data is much more detailed. But for this, we're just going to use Redfin. So let's just start at new listings for Indianapolis. I always like pulling these metros up to find out what's going on without looking at them first, without previewing them. All right, year over year, new listings up 4.8%. Not that impressive. Still very, very, very suppressed in new listings. Now let's look at active listings. Oh, came down this week. Wow. Geez, 5.96% over last year. Not a huge increase. Geez, yeah. I'm sure that whoever was asking about Indianapolis, it seemed like the inventory there is pretty bad. Let's look at pending sales. Down 4%. I'm sorry, down 0.4% year over year. Huh. So Indianapolis, Indiana, pending sales basically frozen, just like Columbus. Homes sold, probably same story. Yep, down slightly, not impressive at all. Now let's look at the days on market. Median days on market. Sorry for the delay. All right. Median days on market, up 4.8 days on market. That's 12.5. Wow. Median days on market, 12.5. Jeez. Man, homes are going like lightning quick there. Columbus is like, what, 30, what we have, 35? Yikes. All right, price drops. Who's dropping prices? Okay, a lot of price drops. 11.9% of active listings have price drops. I've got to assume those are like super expensive homes or overpriced homes, right? Because they don't have much inventory. They're not adding a ton of inventory. Homes are still selling quickly, but a lot of people are dropping the price. Huh. Months of supply. Wow. You're under 2. So you're like a strong seller's market. I classify anything under 2 months of supply as a strong seller's market. So you're up 1 week of supply year over year, but you're still at 7.8. Not very impressive, right? So if you're buying there, it's rough. It's got to be rough. Got to be. All right, now finally, let's look at median sale price. That's what everybody wants to know, right? Who cares about the inventory? Wow, median sale price down for the last couple of weeks, right? It was, let's see, we were back in late June, we were at 321, then we hit 320, now 314. I'm not sure I'd read much into this though, because you can tell where it started the year at $278,000. It's done nothing really. It's gone up and down a little, but at the end of the day, now you're at 314. So it's still up substantially from the beginning of the year. I'm surprised it's not higher. I would think the median sale price would be, somewhere close to Columbus's, but Columbus was 354,000. Year over year, up 7%, but it's headed down, so it'd be interesting to see where this goes. All right, that's Indianapolis. I hope that helped. Thanks for asking for Indy. I should have done that earlier, being that it's so close to me. All right, let's do Houston, Texas. Houston, Texas. Hopefully everybody's safe in Houston. That was a major storm. Look at this. Median sale price. Well, that's where we'll start, I suppose. $350,000, up 2% year over year. So not up a ton year over year. That's good, right? Some good news. New listings. Let's do that for Houston. How's the inventory? New listings are up 13%, but not a massive trajectory upwards. I'm guessing they need a lot more than that to make things affordable. Active listings, not impressive. I mean, it's up 23% year over year, but it's not. I mean, look at that. Active listings, 29,000 active listings. They're like in that 4-week time period. There's like, 3,000 in Columbus. There's 29,000 in Houston. Year over year up 23% on basically 24%, but it's, it hasn't shot up to the point that it's skyrocketed. It is up a lot year over year, but the median sale price isn't dropping. Price drops. 8.5% of active listings have price drops. That's more than the national number, right? At 6.5%. Months of supply. So we got weeks of supply, 17.9. So what's that? That's over 4 weeks of supply. I'm sorry, 4 months of supply. So it's supposed to be a balanced market. So if you're in Houston, Texas, or you know somebody in Houston, they're obviously in a balanced market, I guess, right? I don't know. Is it balanced? It's probably not balanced. There's probably just a lot of overpriced houses sitting on the market. Median days on market in Houston, 30.5. That seems like a normal time, right? About a month. I think historically, month of sitting on the market is kind of normal. Not lately, but historically it's normal. But up 7 days year over year, and that's going up. So it looks like there's just a lot of overpriced, maybe expensive homes there. I don't know. Yeah, crazy. All right, that's Houston. Again, if you live in Houston or you know somebody in Houston, have them jump on the next live because I'll do Houston again. I'd like to know why months of supply has jumped like this. Are there a lot of expensive homes sitting there, or are they, just homes in general are just not selling? And I hope everybody in Houston's safe because that hurricane was something. All right, let's do Boise, Idaho. This was supposed to be like the crash central. A lot of people said, hey, Boise's going to crash and burn. Let's start with median days on market. We're already here. 31.6, up 10 days year over year. But again, 30 days is probably healthy. All right, let's do new listings. New listings, wow, down 3.7% year over year. It's hard to have a crash when the new listings are dropping like this. Actually, you're at a 4-year low. Is that right? I'm looking at this data again, just to check it again to make sure I'm not seeing things. Yeah, you're at a 4-year low at this time of year for new listings in Boise, Idaho. Jeez. I thought that place was going to crash. Guess not. Let's do active listings. Wow. Same thing. A 4-year low of active listings, down 6.19% year over year. That's surprising. There aren't many metros like that, I don't think, where you're actually down. So out of all the metros in the United States, I wouldn't think Boise would be down year over year in active listings. Less inventory. All right. Let's go to... We didn't do this already. Yeah, we did. Did we do median days on market? Yeah, we already did median days on market. Age of inventory, no months of supply. That's what we want. Months of supply. 11.2 months of supply down year over year. So that's what, just a little over 2. It's still a seller's market. Just over 2 months of supply. And by the way, months of supply is like the key to figuring out, where the market is, generally speaking, as far as incoming prices going up. I'm sorry. The months of supply is a great way to look at if prices will go up or down soon, or if they're, where that trend is with prices, because it really factors in demand and supply at the same time. So that months of supply is a great metric to look at. And I'm actually launching 2 videos in the next few days where I show you how to go find months of supply and calculate it using Zillow data. It's pretty sweet. So I've got 2 videos on that coming out. And that's definitely something to check out if you want to understand what's happening in your market, where prices could go soon, up or down. All right, let's, so that is months of supply. Let's do median price. Median sale price, $503,000, up 5% year over year. Boise started at $456,000, right? No, $457,000 at the beginning of the year. Now they landed at $503,000. So it doesn't look like Boise's crashing, at least not from this data. But I don't live there and I don't have any local knowledge necessarily. So if you're in Boise, comment below, let me know. All right, now let's go back to new listings so I don't give away the data when we go to our next metro. Let's do Miami. Miami, Florida. 19.9% increase in new listings year over year. 822 new listings. Doesn't seem like that's that many, right? But it's way down compared to up compared to last year. But man, the other years it's down. So less new listings. I would think that would be straight up, right? All I hear about is Florida and new listings and active listings. It must not be Miami. Let's look though. Active listings. Geez, look at active listings. Up 30%, but it's headed down now. Well, probably because new listings haven't really increased that much. And so now active listings are dropping. Median days on market for Florida. Miami, Florida. What do we got? Wow. Yikes. 68 days, median days on market. But then look back. It has to be the more expensive, like a lot of expensive homes, right, that are sitting. 56 days back last year. Heck, in 2021, it was 60 days. And 43 days back in 2022 when things were like rocking and rolling. So it looks like there's always long days on market there. That's interesting. Let's do months of supply. 31 weeks of supply, which is like 7 months of supply. That may be the highest one I've seen so far. May find another one higher, but right now I wish they would do the top metros with the largest, or the longest months of supply. 31 weeks, that's 7 months. That is technically a buyer's market. If you're at 7 months of supply, that's a buyer's market. And yeah, look down here. We were at 13, or they were at 13.6 down in 2021, which is, 2.5 months of supply. And now they're at 7 months of supply. Last year at this time, what's that? You were at 5 months of supply. Now it's 7. Geez. All right. So Miami. Oh, we got to do price. So Miami, let's see what the price is. $557,000 median sale price. Can you really buy a house for $557,000 in Miami? I didn't know that. It started the year at $517,000. Now $557,000, up 9% year over year. So despite an insane amount of weeks of supply or months of supply and a long 68 days on market, the prices, they haven't crashed, kind of leveled off, based, if you look back here, 560,000 back in March. Now you're at 557. They did start the year at 517, so it's definitely up since the beginning of the year. All right, next metro, let's do, I'll go to new listings first. And now let's go to Las Vegas. Yeah, let's do Las Vegas. I was just in Las Vegas, and it's insanely expensive. Insanely expensive to go to Las Vegas now. Like the days of like the, $20 room and free drinks and you're just gambling, those days are over. It's like a tourist trap now and really horribly expensive to eat. All right. 21% increase in new listings, but that's down substantially from 2021 and 2022 still. So new listings, while they're up They're not skyrocketing up. Active listings up 11% year over year. So there are more houses to choose from, no doubt. Let's look at months of supply. That'll tell us a lot. Months of supply, we've got 12 weeks, which is about 3 months of supply. That's headed to a balanced market. It's still technically a seller's market. Now let's look at median days on market. I'm sorry, median sale price. No, median days on market. 36 days. Seems like that's kind of normal. More than the last couple years. Well, 2023, right? 37 days, about the same as last year, but the years before that, we were at 14 days, 19 days. Jeez. So it's taking longer to sell houses in Vegas. Let's look at median sale price. Median sale price, $451,000. Year over year, that's an increase of 8%. So it started for Las Vegas, 415 grand at the beginning of the year. And now we're at 451,000. Isn't an all-time high? I mean, you can see that back in 2022. It looks like this is probably the all-time high, 456 grand. So not the all-time high, but approaching it. Okay. So now let's do, did Las Vegas. Let's do San Jose. Because it looks like things are going crazy there. New listings, 310 year over year, 29% increase, but it's like straight down now. I mean, it peaked here, but now it's dropped substantially in new listings. It's still up a lot compared to last year, but it's down compared to 22 and 21. Active listings up 37%. But it's kind of stalled out, the active listings. Months of supply. 7.4 weeks of supply. And that tells the story. No wonder. I think when you think about that, that's less than 2 months of supply, meaning it's definitely what I would call a strong seller's market. It looks like it is. Median sale price for San Jose, $1,643,000 is the median sale price there. I just get a kick out of going to this chart and looking at that. I'm complaining about like $350,000 houses. And in San Jose, the median price is $1,643,000. That's up 10% year over year. Look at where they started. $1,396,000. It dropped down a little, but now it's gone back up. Now it's up, 300 grand since the beginning of the year. But after $1 million or $1.5 million, like who's counting, right? Does it really matter? Wow, 10% increase year over year in median sale price. Nuts. That's cool. All right, San Jose. Now, Atlanta. Haven't looked at Atlanta yet. ATL. Let's do it. Oh, started with median sale price. That's okay. That's kind of the most exciting part normally, right? $416,000 median sale price. Up 4% year over year. Chart kind of looks like Columbus in a way. $375,000 at the beginning of the year. Now you're at $416,000. By the way, this is an all-time high. A lot of these are. I haven't been saying that, but like this one, I got to think it's an all-time high. We can't see before 2021, but I got to think prices were, lower than this before 2021. And a lot of metros peaked in 2022. So the previous high, it looked like, was what, 404 back in 2022, but now median sale price, it peaked at 419 grand for Atlanta, Georgia. Let's look at new listings in Atlanta. Yeah, no, wow, down 9% in new listings year over year. They have less inventory than they have. They've had less new listings than the last 3 years, right? The last 4 years, if you count this year. Wow, that's surprising. A lot of people thought Atlanta would crash soon, right? Doesn't look like it. Active listings, not impressive, only up 0.74% compared to last year. No wonder median prices, keeps going up. Months of supply. 17 weeks of supply. You're just over 4 months of supply, just over that. So that's considered balanced. Again, it's probably expensive homes or homes that are just sitting. Maybe they're destroyed, they need like a roof or windows or a foundation. And I am going to get to that special Redfin data here in a minute. I am at the very end. I'll get to that. I promised you I would do it. I will get to that. I've got one more metro, and that is Minneapolis. Why I picked Minneapolis? I don't know. Nobody requested Minneapolis, but people have in the past, so I thought I would highlight it. So Minneapolis, weeks of supply, up 1.1 weeks of supply, and that's 9.3 weeks of supply, which is just over 2 months. Still a seller's market. Let me go to new listings. Wow, look at new listings in a lot of these areas are down now, down 6.2% year over year. They're not adding any inventory at all, hardly. Active listings, only up 5% year over year. That's not impressive either. Price drops. Like it is nationally, 6.5% of homes had price drops. But that's not abnormal compared to the national number. All right, let's do median sale price. $393,000, up 4% year over year. This has continued to go up too, right? You started at $354,000. Now we end up at $393,000. I mean, this is like Columbus's market, right? Where hopefully this doesn't happen next year in Columbus, where we start at 354 and end up at 393. I can see it happening, unfortunately. Hope not. But geez, you can't catch a break if you're in Minneapolis. You just can't. Wow. All right, let's look at this hidden Redfin data. I saved that for the end. Maybe I should have done it earlier, but I didn't. So let's look at it now. Okay, so let's look at delisted homes. So when you have a house on the market and it doesn't sell, but you pull it from the market. So you could pull it because maybe it's a rental and you decide to rent it instead of sell it. Okay, that makes sense. Or maybe you were going to move, but only if you sold your house for a certain price and you end up not selling it. So then you take it off the market. So a lot of times that's called expired, or it could be canceled. They could cancel the listing. That happens too when somebody just gets, they decide, while it's being listed and it hasn't expired yet, they decide I'm just going to cancel the listing contract and take it off the market. So all those things fall into a category called delisted homes. And Redfin actually has a data set. If you go into their weekly data, you can download and look at a lot of other metrics beyond what they present each week. And one of them I thought was interesting was delisted homes. And so delisted homes, again, homes that are pulled from the market that don't sell. And so they're not active anymore. And so if you have a lot of expensive homes on the market and new listings are dominated by more expensive homes and affordable homes are still not hitting the market, a lot of times because people are not buying luxury homes to the point that they were when rates were, 3%, they oftentimes become delisted. So these delisted homes, I created a chart for this, and this is shocking. I mean, look at the percentage increase of delisted homes in the United States. This is for all markets. And again, this is Redfin data. So the blue line here is the year over year increase or decrease. And the light blue line is the number of delisted homes. So, and they're in thousands. So right now we've got 21,000 in the last 4 weeks, just like the Redfin reports. We had 21,000 delisted homes. So 21,000 homes came off the market. And if you think about this, if you're adding on new listings like we did, you're adding 90,000 new listings, but 20,000 are becoming delisted. That may be one of the reasons why active inventory hasn't completely exploded. Because while we are adding some new listings, a lot of listings are just coming off because it's wish pricing, right? It's one of those situations where people think, oh, I can get this for a house because my neighbor did last year, but it's not last year. So they list the house for 5% more than the neighbor did last year, and now they're not getting it. So they're like, oh, well, I was hopeful, but what are you going to do? And then they pull it off the market. Wish pricing. So you got 21,000 of those delisted. And look at the year over year trajectory. Look at this. So right now we're at 110% increase compared to last year at this time in delisted homes. And again, look at the trajectory of the number. You can see it sweep up, right? This year, certainly highest it's been in 4 years. And then look at the year over year increase or decrease. I mean, back in September of 2023, we were down year over year in delisted homes, but then look what happened. Boom, 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 straight up. So a lot of people, in my opinion, put their house on the market. It's wish pricing. They don't get it. They pull the house from the market, and it's delisted. So anyway, I thought that data was telling. I did. I thought it was interesting. Hey, Coors Light. Hey, Jason, can you give us a quick update on your remodel project? If you're short on time, then maybe next live. No, I'll give you an update. Yeah, thanks for asking about it. I don't know, it was a couple weeks ago maybe, I posted a video that kind of took you behind the scenes of a house that I'm flipping. I don't flip a lot of homes, but sometimes the situation calls for it, or if the asset fits a flip better than it does a rental. Most of the time I'm buying stuff to keep it and hold it and rent it, but sometimes I'll flip something. So anyway, I did a video, you should check it out, that it takes you, through the house that I'm flipping, and kind of, it tells you like a little bit about it shows you a little bit about where I messed up in the flip and kind of where I did a good job. It's not done yet. And again, thanks for asking about it. But it's probably like 90% done. It actually will hit the market July 26th, 27th. And I saw today that they finished the cabinets in the kitchen. Those are all done. The trim's all done, and the electric's finally done. And so I'm kind of at that final push. I think my contractor was doing the tile today in the shower and the tile backsplash. So anyway, thank you for asking. I will show some video and pictures of that the next time I'm out there. It's out in the middle of nowhere. It's out in the middle of the country, but it has 5 acres with it. So, and it's priced below the median, way below the median. So that's the key, folks. If you're going to flip a home, especially right now, make sure it's priced under the median, and make sure it's FHA ready, VA ready, meaning it'll pass all those inspections with flying colors. So, focus on the big things in the house to make sure it's a solid house that somebody can just move into. Skip anything extra that isn't needed. So don't put more bling than you need to in the house, and keep the price low for the buyer, and obviously a price that you're going to make some money at. So that's kind of my strategy with the house, and hopefully it works out. But thank you for asking. All right. So that was yep, absolutely. I'm happy to present it once it's all done. All right, that was a live Redfin update. Thanks for joining me today. I hope you got some value out of it. Please do me a favor, subscribe to my channel, comment below, share the video, and tell me if there's a metro you want me to analyze. I'm happy to do it. I love this stuff. It's fun to go through this data. It's nerdy, but it's really fun. And stay tuned because I am going to do a live update on the Realtor.com data. Because the Realtor.com data is much more intricate than the Redfin data. But the Redfin data is fun to look at because there's like these colorful charts and stuff. So anyway, have a great day. We'll see you on the next Redfin Live.